I will be sharing the best CD rates that you can get into the marketplace, and that is up to 5.50%. There is lots and lots of uncertainty into the market. Fed is going to decrease the interest rates. Inflation eases and Fed is setting up for September rate cut ahead of the election. Federal Reserve is edging closer to cutting rates. The question will soon be how fast they're going to move. The rate reduction this fall, the first since the pandemic, would amount a momentous shift and a potential boost to the economy. Fed rate cuts over time typically lowers the borrowing cost for such things as mortgage, auto loan, and credit cards. However, if you have some cash and if you're trying to figure out what to do with the cash, where you can park, how you can earn the best return on your investment, stay here because I'm going to share the CD rates with you. Certificate of deposit where you have to lock the money. But fear not, because I'm going to share a way with you that you don't really need to lock the money for 1 year, 3 year, 5 years. However, you can do that if you really want, but if you don't, then you can park your cash for a limited period of time and still you can earn one of the best interest rate. The beauty of what I'm going to share with you is if you want to buy certain CDs from the banks that you can see right here, you don't necessarily need to open an account with those banks. Still, you can buy the CD from that particular financial institutions without opening an account with them, and you can still earn the best interest rate possible into the market. I will also share with you the CD calculator. CD calculator will tell you exactly how much money you're going to earn at the period ending for the CD that you have parked the cash for. If you are new to this game, let me tell you what is certificate of deposit. I want you to watch the full video, but before that I wanted to ask you to hit the like button. All I ask you in return is hit the like button and subscribe to the channel so you don't miss out on very informative content that I'm going to put around personal finance. A certificate of deposit is a type of saving account that pays a fixed interest rates on the money held for an agreed upon period. Now, CD rates are typically higher than the savings account, but you lose the withdrawal flexibility. But wait for the full video because I'm going to share a way with you that you can buy shorter term CD. Still, you get the best interest rate into the marketplace. For the CD, the key takeaways are certificate of deposits are generally paying higher interest rates than the savings account or money market accounts. CD are a safer and more conservative investment than stocks, bond, but offer lower opportunity for growth. You can find CDs at your local bank, credit union, and the brokerage. The CDs are usually you can find that is insured by FDIC. The top CD rates can be 3 to 4 times higher than the national average rate of return. Find out how much you are going to earn. You can use this calculator and I'll put this link into the description below. The way it works is, let's say if you are able to find the CD at 5.15% at 1 year interest rate and you want to find out how much is the earning going to be on the money that you're going to put into the CD. Let's say your deposit amount is $25,000. Once you put $25,000 as initial deposit, you want to choose for the period over how long you're going to put the CD for. Let's say in this example, we are going to take 1 year and you're going to earn 5.50% on $25,000. In that case, your total will be $26,375 when the CD matures. Your earning will be $1,375, which is a lot higher than the national average. For this amount, if someone invests, they are going to get $412.50. So the total interest that you earn is $1,375, and your principal amount will turn into $26,375 with the interest. One of the bigger limitation with this type of CD is you're going to lock this CD for a certain period of time. In this particular example, you have to lock this money for 1 year period of time. Before I go ahead, I just wanted to tell you what's the best interest rate that you can get into the marketplace right now at this time. So you can, as you can see, Marcus by Goldman Sachs, you can get 5.15%. Minimum deposit amount is $500. The term is 1 year, and estimated earning is going to be $2,575. The best CD possible into the market. So one is Marcus by Goldman Sachs. You can earn 5.15% for 1 year APY. APY stands for annual percentage yield. So that is going to be based on the annual term of the time frame of the CD. For 3 year, if you want to lock in your money, you can earn 4.15% APY, so on a yearly basis. For 5 year, you can earn the APY of 4%. There is another CD for BMO Alto that you can get 5.05% for 1 year, 4.60% for 3 years, and for 5 years you can earn 4.75%. Alliant is the credit union that pays you a pretty decent amount of interest rates on CD. For 1 year, they're paying 5.05%. For 3 year, they're paying 4.15%, and for 5 years they're paying 4%. I'm going to share with you how you can earn the best interest using your brokered CD. For that, you need to have a brokerage account with one of the brokerage firm called Fidelity or Vanguard or anything that you use as your brokerage firm. I'm going to use Fidelity because that's what I'm familiar with, but any other platform, if you're using, let's say, Vanguard or TD Ameritrade, it's going to be pretty same. So for Fidelity, if you have an account with them, you can go to News and Research and click on the fixed income bonds and CD. Once you click there, you should be able to see the CD and letters. When you see that, you want to click on CD and letters in order to see the best interest rate. If you scroll down, you should be able to see the new issued CD by top rates. With this, you can find the CD for 5.20% for 3 months, 5.05% at the moment for 6 months, and 5% for 9 months. If you want to invest for longer period of time, you can get 4.95% for 2 years, 3 years, and 4 years is 4.80%. Remember that these are the best CD rates that you can find in new CDs and secondary CDs as well. So once you click on each of this link, you should be able to find that out. For your convenience, I have the screen here that you can find. Once you click, once you log in, you should be able to see these rates at the moment. If you're using Vanguard, you will have similar rates. If you're using any other brokerage platforms, you should be able to see this CD rate. So in this example, as you can see there is a coupon from Independence Bank of Kentucky that you can find 5.10%. The term here is 1 month period. Now for 1 year, you can get 5.05%. So let's do some math. You want to invest this money, let's say for 6 months, you simply go here and click on months and change this period to 6 months. Once you have that 6 months for 5.05%, you should be able to find out how much money you are going to earn. So on $75,000 within 6 months, you're going to earn $1,870.43. Your principal amount of $75,000 will turn into $76,870.43. This is a brokered CD. I have another example here for your convenience that I found a CD from JP Morgan Chase Bank at 5.05%, which is 1 year time period with the yield of 5.05. So let's say if you buy this CD today, your maturity date is going to be 08/06/2025 because this is going to be for 1 year. The minimum investment for this particular CD is $1,000. You should be also able to find the QSIP number right here, which is unique identifier for any particular CD. And this is a brokered CD, and I'll tell you in one more second what that means. Your pay frequency is going to be at maturity, which means you're not going to get any interest until the CD matures. But the beauty of this is this CD is FDIC insured. This is from JP Morgan Chase Bank. Remember, I don't need to have an account with JP Morgan Chase. Still, I can buy this CD via Fidelity because this is a brokered CD. You can find the minimum investment of $1,000 right here. The bank state is in Ohio. This is federally taxable CD, and this is not a marginable CD. You don't need to worry about a ton because this is insured by FDIC. Issue date is going to be 08/06/2024, which is going to be in next few days. The date is, you can find all this information and the maturity date as well. Call protection in this particular example is none. There is no continuously callable CD. And here the coupon rate you can confirm is 5.05%. The coupon type is fixed, which means you cannot really withdraw the CD in between, but you can really get the redemption of the CD and you can get some sort of penalty, but you can still have access to your principal amount. And in this case, you should be able to see that you can earn one of the best interest rate into the market. Now, you may have questioned what the brokered CD means. So let me share this information with you. The brokered certificate of deposit or brokered CD is that the investor purchases through the brokerage firm or the sales representative other than a bank. Although the bank still initiates the CD, it outsources selling it to the firm, offering incentive to attract new investors. The broker invests in considerable sum with a bank and then sells off that investment in smaller pieces to a variety of investors as brokered CD. Some of the key takeaways that you really want to learn is a brokered CD is a CD that as an investor purchases through a brokerage firm or sales representative rather than directly from the bank. A bank still initiates the CD, which is a brokered CD, but they outsource this by selling it to firms that they are trying to find the potential investors. Brokered CD is typically yielding more than regular CDs because they are in more competitive market, as you already know. Brokered CD generally offers much more flexibility than the traditional bank CDs. So this is one of the key benefits as to why I'm telling you that brokered CDs could be better suitable investment for you. Remember, I am not a financial advisor nor I'm a certified professional. These videos are for entertainment and educational purposes. The flexibility of the brokered CD can make it easier for investors to make mistakes as well. Now, what are the pros and cons of brokered CD? The brokered CD is generally gives you high interest rates due to the competitive environment. They are also longer term to lock in with the higher rates, so you are safe earning the guaranteed interest rates that the bank is offering you. It is also FDIC insured, so you have peace of mind for $250,000 per social security number. It allows you to skip the early withdrawal penalty as well. So this is one of the very key benefits that you can sell that in the secondary market. Better liquidity since they can be traded on the secondary market. So you can sell before the maturity date in this case, but you can still get access to your principal or the original amount that you have put within the CD. It has ability to keep multiple CDs from different banks in one brokerage account. So you don't have to run to different banks or credit unions or anything else or any other financial institution in case you want to buy CDs that are offered by those financial institutions. There are some disadvantages of brokered CD as well that I want you to be mindful of. There are 4 potential disadvantages to be aware of when it comes to brokered CD. If a CD is callable, you could lose your high interest rate along with the future interest that you could have earned. So you want to be very careful whether the CD is callable or not. Your brokered CD should be uninsured if the original issuing bank or credit union isn't FDIC or NCUA insured. So in this case, we verified that our CD that we saw from JP Morgan Chase is FDIC insured, so you don't really need to worry about that part. If you need to sell your brokered CD on the secondary market, you may have to sell it for less than it was originally worth. So that's the risk that we talked about as well. Since the deposits are not approved by the federal agency, you could be purchasing a brokered CD from an unreputable source if you don't do the background check, and which is why I strongly recommend that you verify all this. We verified that the call protection is none and continuously callable for this JP Morgan Chase CD is none as well. However, you can still get all the benefit of traditional CD when it comes to FDIC insured. As you see, this FDIC insured is yes, which is again the pro. One of the things that you want to also learn is they command higher yield compared to the bank CD, but they are available for a shorter period of time. So as you can see right here in my screenshot that this CD can be filled up very soon. So tomorrow morning, let's say if you look into Fidelity.com or Vanguard.com, you may or may not be able to see the same CD with same interest rate from the same bank. However, they can add more money for sale or they can change the amount overnight, and it could be in real time. So those are some of the things that I wanted to keep in mind. I hope you enjoyed this content. If you did, hit the like button, subscribe to the channel, turn on the notification bell, and I will see you in the next video. If you have any other questions, write down in the comment section below. If you need any help, also reach out to us via email and we're happy to help you. We're not financial advisor, we are not certified professional, but if you have some questions, happy to help you out. Thanks once again, and I'll see you soon.